Hey guys, this is Hydra from xtrades back with another video, and in this video we're going to talk about double bottoms and how to trade this setup. So double bottoms are a setup, or double bottoms is a pattern that we often see, especially when stocks are going through their consolidation phase, right? And yeah, typically how it looks is we have a base, right? And stocks typically consolidate within this base, right? And this could be for a couple months to couple months, or a couple weeks to couple months to a couple of years, right? And then typically we get some sort of like shakeout leg, right? And then bounce, and then we get a big breakout. So this is typically how the double bottom pattern looks like, right? So you typically start out at a low, right? And then you get a nice rally, and then you're consolidating for a while, and then you get a nasty shakeout, and you get a rally again, and then you consolidate for a little bit longer, and then this nasty shakeout usually tends to be the bottom, right? And then you get a very nice rally. So the reason that this works is a bunch of buyers are trapped in here, right? And they have their stop loss set to this level because that was the most recent low. And what happens is when that low gets cut, right? When that low gets undercut, a lot of people get stopped out. And this is when a lot of the weak holders basically transfer their shares over to the institutional buyers, right? This is where they buy. And yeah, so now all the shares are transferred into people that actually want to own the stock for the long term, right? So a lot of strong demand comes here, right? And then the people that got stopped out, they tend to buy back here at a higher price, and then this is what really causes that rally, right? So this double bottom pattern works incredibly well, especially if you're trying to bottom pick stocks, right? This is very different from my style of trading, which is momentum based trading, but this is something that also does work and something that I've noticed over time. It provides pretty good risk reward ratio, right? So let's go through a couple examples. And I'm on the weekly chart, just an FYI. But yeah, we'll go through how the setup works, right? So Microsoft here had a double bottom, right? Here was the first bottom, and then it had a rally, and then this was the second bottom. So here it didn't undercut, but same rule applies, right? So it doesn't always have to undercut the low, the previous low, but typically it will go back to where that previous low was, around that range, and then we'll typically get a bounce a couple weeks later, right? So here's Microsoft, um, right? So here is the body. The body typically, or this candle, this is the low of the candle body, right? And this is typically where a lot of people have their stop losses set. And on this candle, we take out that low and then close above, right? So slight shakeout candle, and then this one ends up rallying much higher, right? So the way you would want to play this is let this consolidate for a little bit, right? So the next candle, it formed the inside bar. So you basically can buy this as the inside, or you can basically trade this as an inside bar setup, right? So when the inside bar breaks, then you buy. So on this candle, you buy around that 240 area, and then stop loss at that inside bar low, so 226, right? So you're risking around $14, and this one goes all the way up, pretty much almost doubles, right? A $230 move. So insane risk reward ratio there. Let's go through a couple more examples. So Amazon here is so again, very similar, right? This is the low, and this time we actually undercut it, and then we get a bounce off, and then we actually create another low here. So this is kind of like a triple bottom or head and shoulder pattern, right? But same idea, right? So this is the low, and then a lot of people got stopped out when they put their stop loss at that candle's low, right? And then basically shares got transferred over to institutions, right? And they basically moved the stock up pretty high, and then it consolidated a little bit more, and then this one pretty much just took off, right? So again, this is the candle that you want to be buying, right? So this is where we're undercutting, and then once this mini downtrend or mini flag breaks, right, that's when you want to be buying. So you can either buy on this candle or the start of this candle, right? Stop loss would be the new low. So you're risking, if you buy at 87, stop loss at 81, so you're risking $6, right? And then this one moved all the way up to 223, so that's 163% move in the 143 points. So again, pretty insane risk reward ratio. Let's go through a couple more examples. So this is CRDO back in 2023. This one was this one was just consolidating. It was in stage 1, and then this year had a very nice rally. But yeah, so CRDO back in 2023, this was the bottom, right? And then here we have a undercut of the bottom, and then a very strong rally, right? So this is a great example. A bunch of people had their stop loss set at that low, and then once we undercut it, all those people basically bought back very quickly, right? They had FOMO that they missed the bottom, and then this creates that demand, right, that we see over there. So this is a great double bottom setup. So again, this is the undercut bar, right? So you buy when that candle breaks. So on this candle, when that candle high breaks, that's when you buy. Entry around 8.3, stop loss 7.2. So you're risking $1, right? And then this one ends up going up 823%, which is absolutely insane. Let's go through Snowflake, another example. So this one was a very long double bottom, right? So this is the first bottom, and then this is the second bottom. So almost a year after, right? And then same thing, right? So we undercut here. So this is the first undercut, right? So you buy on this candle, and then you end up getting stopped out here because we get a slight undercut once again, right? So this time you buy when this range basically breaks. So you buy around this candle, right? Then it forms a flag. You have a chance to add to your position, and then yeah, this one has it had a very big breakout, huge volume. So it looks good now. And to current price, this is at a 40% move, and your risk would have been around 6%. So again, solid risk reward ratio. CLS, this is another big winner in 2024. So here's the undercut setup, right? We form a bottom here, and then on this candle we pretty much just touch it and bounce off right away, and then again we get very close and then bounce off right away. So this one would have been harder to trade on the weekly chart because it just didn't offer you a lot of setups, but if you zoom in and go to the daily chart, you would see a lot more opportunities like mini flags or like inside bar setups, right? So for example, this was an inside bar setup, so this one is buyable, right? You buy when this inside bar breaks. Stop loss here. So if you did that, you're risking 11%, and it is up 113% right now. So 10-to-1 risk reward ratio. Let's go through a couple more examples quickly. So this is Instacart. Here's the bottom, and then we basically create a shakeout candle, right? Undercut the bottom just slightly, and then very nice rally. And this one had 66% move off that bottom. NVIDIA. So this one back in 2023, this one was forming a base here, right? And then this was the first real low, right? Or yeah, this was the first real low. This part was like an uptrend, and then this was the first real low, right? And then we undercut that low here, and then had a nice rally, consolidated a little bit more, and then huge breakout, right? So this one was a really nice setup. It had a really nice move, 278% from the highs, or from the lows. And then SMCI, this one's a really nice example as well. So these were the lows here, right? And then we had a huge rally, and then we undercut those lows, and then we had a very strong bounce. So this was the undercut candle, right? So we buy when we reclaim the undercut candle high. So we buy around that 24 area, and then stop loss is at that undercut low. So around 29%, and then this one pumped all the way up to, this one almost doubled actually, but 98% move. So around 4-to-1 risk reward ratio. All right, last one, MicroStrategy. This one also had pretty nice undercut setup, right? Here was the bottom, and then on this candle we basically undercut, and then rally, and then consolidate again, and then very nice push. So again, if you bought around here, right, this inside bar setup, so let's say you bought around that 141, stop loss is around 101, so 29%, and this one moved 282% from to the highs. But yep, I hope that was sufficient examples to understand the double bottom setup. And yeah, I hope you guys incorporate this into your trading strategies. But yeah, I hope that was helpful. Thank you guys for tuning in.
There's a reason why xTrades is currently the fastest growing application on the market for sharing financial ideas. With over $2.5 million paid in the last 2 years to contributors, users are flocking to see what trades the top traders on the leaderboard are sharing in real time. If you're looking to grow your reputation as a trader on the internet or discuss your trading ideas with other reputable investors, click the link below and get connected with a trading mentor today, completely free of charge.